how do you have a business roundtable that's looking at productivity and skills and not have any of the senior mining executive there? That's absolutely staggering. No BHP.
No, well, it's interesting to see this. They all gave submissions. They were all part of other parts of the round table in the prelude, in the introduction, but they weren't in the room today. And so I just sit there and go, well, it just seems to me just a little bit peculiar. And so the real trouble here, I would sense, is that there's a view for all of these social programs that the government's put out that they've got to pay for them somewhere. Like the government, if you think about this, has got enormous amounts of debt. It's got a warning from Standard & Poor's that we could lose our AAA credit rating, that we're on the edge of that AAA credit rating right now because we don't actually have a budget forecast to be in surplus for a decade. We've got the net debt now $550 billion at June 30 this year, going out to $770 billion within 4 years and then beyond that. So that's just adding onto the strain of the budget. So you sit there and go that what the country needs to do now, Steve, is to grow. It needs to grow faster. It needs to get moving. Now, this is partly what the Productivity Roundtable's about, but the fact is you don't do that by hamstringing energy companies, mining companies with so much red tape, and they're saying, OK, we can get rid of some of that, but then it's industrial relations. It is the price of energy that is killing off many of our aluminium smelters, our steel works in Whyalla, who are all going to government for a handout to say, if you don't basically bail us out, we'll go broke and we will not come back. And there is a fundamental problem for Australia right now, that these businesses, if they do disappear right now, they won't come back. Australia will lose investment, it will lose jobs, and it will lose the future income that pays for the government's social programs.
Craziness. Just finally, Ross, I mentioned to Andrew Clennell this story about CSL today, that loss of 3,000 jobs. I presume that's globally. You and I have always had great regard for CSL, you know, headquartered there in Melbourne, and share price has gone through the roof. What's gone wrong there? Is that purely down to Donald Trump's tariffs on pharmaceuticals?
That's what it's all about, yeah. So I don't know whether you've seen the share price today, Steve. It's collapsed by 17% in one day. For a company of that size, so it effectively wiped out almost 1%, about 2/3% of our stock market today, CSL alone. That's what it did. It was so big. So it's dropped by $20 billion in the value of the company in one day. 20 billion with a B. So the issue here is the company basically not having big manufacturing in America where it needs it, because as a result, Donald Trump is suggesting that pharmaceuticals imports into the United States could attract a tariff of anything up to 250%. So it seems almost certain that CSL is going to be busted up into different parts to try and extract revenue. And also the 3,000 job cuts are all about trying to cut back on the amount of, sort of revenue that they've actually got and the costs they've got going out the door. So really, for what has been the poster child of Australian manufacturing, right now, again, is another bit of a troubling issue that, again, the government has got to take some notice of.
Good work, Ross. Thank you. Talk soon.